is off. I'm sharing my screen. Could somebody please give me a sound check to make sure my production creativity has been good tonight, successful? I would appreciate that. We're going to kick things off with a little bit of a dispute I'm having with my congressman, Nick LaLota, who I actually voted for. I voted for. The discrepancy that we're having, and we're talking about, we are a mile apart, is that Mr. LaLota, who claims to be a representative of mine, is not representing anybody that voted for him. He's representing himself. He's representing the military industrial complex, and he's representing the, 6 or 7 members of the Appropriations Committee that are holding out for voting for Jim Jordan. So, LaLota, either you're with the swamp or you're with the people. Who do you work for? I've tweeted you. I've begged you. No response. Do your job. Vote for Jordan. Talk to your friends. Buddy up with them and tell them, get their act together. We're watching you. And if you're wondering if your congressman is on the list of those that aren't voting for Jordan, I'm going to send this out. Here's the list of them. I'm not going to read them all off here, but call them. Get them very, very motivated to do their goddamn jobs. They're supposed to be passing a budget, and all they're doing is holding up progress. You got to get these rhinos out. Primary these guys out if they don't do the right thing. Let's get going. Let's talk about the futures action. Thank you for me just blurting it out there. I'm going to go over comments. Let me first bring up LaLota. Reply back to me, please. Thank you. I'm a very nice person. Okay, let's go over comments. We have the e-minis that are open here. We're up fractionally. I think that we're probably going to open up higher tomorrow. The beating was just so brutal. We're right off of that 4,200 mark. If they do gap us down tomorrow, it's probably going to test, maybe undercut 4,200, and then we should get a rally here going into earnings. Now, that rally is to be faded in my book. So let's say hello to people. Let's let things settle down in the futures. Mike, hello. Meta, in the October 27th, 320 calls for 3 contracts. All right, so that's 2 days after earnings. Probably going to lose my on this. Should have went with the smallest. So then just, if did you sell the contracts or did you buy the contracts? If you sold the contracts, your implied volatility is working in your favor. If you bought the contracts, implied volatility is working in your favor because they're getting more expensive. Now, if you sold them, that's a problem. And you have a gamma risk event there on those contracts. So if I were an owner of them, I would probably exit stage right. But you never know. I mean, it's a lotto ticket. That's really what it is. If you're long on the contracts, it's a lotto ticket. I'll look for your reply, Mike. Sean, hey, brother. Could have cut my losses sooner last week. Just being transparent here. That's fair. You know, I took a loss on Meta, and the reason being is that a small loss is much better than a potential massive loss, which is what I was staring down the barrel of if I didn't take action. So there's no problem with it. There's no shame in it, because what do we do? What's our job? What's job number one? Don't lose money. And if you do lose money, lose small, don't lose big. So I just did my job. So I preserved my account, because that's how people blow up their account. They're focusing on the hope of making money. They're not focusing in on, how do I not lose money? Or if I do lose money, how do I not lose big? So it's all good. It's all good. We all have our opportunities. The NQ just took a bump up on a 1-minute chart. Yeah, I think they're all going to. I think that we're due for a bounce here. I saw Tesla after hours. That started to flash a squeeze in the after hours session. They bid it up. So that was kind of my inkling that they're going to try to bid the market tomorrow. Franklin, hey, brother. Hope everyone enjoyed their weekend. Yes, sir. Hopefully you did too. Wow, What is cooking for the new week? Okay. I think we're going to be looking for very short term, very short term. We're going to be looking for long opportunities, and then we're going to fade the market. And we're going to look to get short. Thank you, Seymour. Jody, welcome. Larry, regarding GLD, the 50-day exponential moving average cross up to 200-day. Gold could go parabolic. Yes, it can go parabolic. The dollar broke down last week, down below weekly support. We're going to look at the dollar in a while, see whether or not we're going to look at the dollar, euro, yen in a little while to see how they're opening up the new trading week. Do we put in new lower lows on the week, or do we get new higher highs? Now, what we need to focus on here or differentiate is between the gold stocks and gold, right? Because the yield curve is now very close to uninverting twos versus tens. The shorter duration yield curve, they've already uninverted. So that's when problems with equities begin to ramp up. So if we do get a sell-off, or even if we get a rally in the equity markets, meaning high tech, that's probably not going to bode well for the gold stocks. If you get a rally in yields and a rally in the dollar, also not bullish for the gold stocks. That being said, I would love to see a pullback in the equity market along with the gold stocks, because the equities, margin calls go out, people sell what they can. I'm a broken record on this. I haven't loaded up on gold stocks because I'm waiting for that downdraft, because when that tide goes out on equities, everything is going to go down, but gold to a lesser extent, because gold right now in a monthly time frame is getting ready for a massive rally, and it can't be ignored. So on any pullback, and we're going to look at gold as well in a moment, on any pullback, I'm going to be looking to load up on call options going out about a year and a half on the GLD. So I view any pullback, as long as we're getting a breakdown in the dollar, I view any pullback on gold as an opportunity, because we are just setting up so good. Pete, Mr. Pete, welcome. Good evening to you. Sean, thank you very much, sir. Falcon, the Republicans are acting like Democrats. They are Democrats. All of these Republicans that I just put in this link, they're all Democrats. They're all, if you had any passion whatsoever for your job, if you had the determination that you're going to represent, at least vote for the speaker, who's a pretty good guy, Jim Jordan. If you don't know him, I mean, there are a lot of trash bags in Congress, both on the House side, House and Senate, Democrat, Republican. Jim Jordan is one of the good guys. So he needs the vote. Lalota, we're still thinking of you and all your buddies over there. We're not going to forget. We're not going to forget. And I called your office as well, twice, Washington and in Long Island here. Thank you, Mike. Moon, hey, Moon, welcome. Love the name. Hi, Bob. Jordan, unfortunately, didn't want to fight. He didn't want the job. He didn't want the job when McCarthy was running. But if there's one guy that's a conservative, it's Jim Jordan. I hope he gets the job. Byron Downs is probably the best America First candidate. I don't know much about him, but I'll take your word for Trader Isaac. All right, Mike, so you're long in the Meta calls. So in a way, you should do well tomorrow, because Meta's probably going to rally with the rest of the market. If you don't want the risk going into earnings, simply just sell the rally, fade it, and load up on your cash and reestablish a position after Meta announces either long or short, but that way at least you have your capital. Harry Dent's saying gold market will go down. Harry Dent's been saying that for 5 years, 6 years now. He's like a broken record. So I'm not a big Harry Dent fan. OG1 Kenobi, it's been a while. Good evening to you, pal. Mike, totally agree. Lottery could be earning surprise Wednesday, post-market earnings announcement. Yep. Would Tesla short covering be called a mean reversion? Well, it could precipitate a mean reversion, sure. But remember, you're going to have algorithms up at those moving averages, like what I have up here. You have your 21-day exponential moving average, your 34, your 55, and your 89. Now, what do these all have in common? They're all Fibonacci retracements. So we're going to be looking for ideally a retrace to these upper bands of the Fibonacci, but we will be looking to load up to the short side on any rally. It's probably going to be a rip your face off rally. So again, going into the new trading week, I'm not going to be the least bit surprised to see a rally in the equity market, but it's to be faded. I'm going to go over why in a moment. Cool. KRE puts December, KRE. Remind me what that is. KRE. That's the regional banks, right? Yeah. Regional banks. Yeah. December in the puts, December in the money. Okay. Just watch seasonality. That's it. I'm not saying you're wrong. You're probably going to be right. But remember, November is a very seasonally favorable period of time. I'm not trying to rain on your parade, but I feel obligated to say that. So, TF Hatter, welcome, brother. All right, let's get to it. Hey, Congressman Lalota, I'm still thinking of you. All week long, I'm going to be talking about you on my live streams, and I'm going to be routing in the local members of Huntington. I'll put out ads. I will put out ads. I'll pay for it myself about you. They're cheap. They're local. I can get very, very defined in my advertising about you. Do your job. Okay. Let's do it. All right, so we have the E-minis spot 2%. Pretty quiet evening here. Not a lot of follow through yet, but it may pick up, especially when China opens up. Let's take a look at, I'm in the wrong chart group. The Russell 2000, it is up spot 6%. We are heading into a seasonally favorable period of time this year. November, we have only a few trading days left to go in October. The Dow Jones, very similar to the rut. Let's put out an alert here. Not that I follow the Dow too much, but I forgot to do it with the ES. Let's go back to the ES. I feel like I didn't do my job. Like Congressman Lalota, I didn't do my job. I'm thinking about you, Congressman. Okay. Now, what we want to do here as well. All right, so we're going to be watching for that weekly break of the S&P 500. I don't think we're going to get it early on this week, but I'm not overly confident about that. But we haven't touched, the reason why I'm hedging right now is because we haven't touched that 4,200 mark. So that's why I'm hedging my bet right now. I think that if we tap that 4,200 mark on Friday afternoon, gave a little bit of a bounce off of that support level, then we will get the follow through on Monday morning. We didn't touch it, so I'm a little bit iffy. I'm on the fence. However, if they dump this market tomorrow morning, then I'll be looking to buy. And this is probably one of the times where I break my rules, where I'll buy the early morning dip and look for a rally into the close. So we'll take advantage of it. If we rally, then put in lower lows, then we'll just get out, take a small loss. NQ, that's the NASDAQ 100. Where is you? A little bit of a fade off the highs here. Up. I mean, these averages are all pretty much the same. You would expect more beta out of the NASDAQ 100 and the IWM. You're not getting it. It's on par with SPY and the Dow. So not a lot of enthusiasm here. And what I want to bring to your attention is what we're firing off. This is only a 5-minute chart, so this could change by tomorrow morning. But we're firing off these blue bars. That's the beginning of a squeeze. So you're probably going to get higher highs here. But what you really want to focus on, I'll give you a sneak peek on a project I'm working on. It's going to look very busy. Ignore the overlays. But you can see that I have up here is telling me on this 5-minute chart, it's telling me the condition of the potential for a squeeze on a weekly time frame. All these are 3-day time frame, 2-day time frame, 30-minute time frame. And this correlates with this squeeze down here. Not so much this squeeze, but this squeeze down here. So we're firing off. Actually, you know, both about the same. We're firing off in a 5-minute, but the hierarchy, the 1 hour, 2 hour, 4 hour, they're still very, very negative. So we could easily fade this and not open up strong tomorrow morning. Now, if these were all light blue, then obviously we're going to open up really, really strong. Most of the week, last week, these were all red, looking very, very weak, but it's starting to improve somewhat. Let's go back to where I was. That's not where I was. What study was I on? There we go. That works. Okay. Now let's clean this up a bit. I'm working with a developer on some of these scripts to refine them a little bit better. More to come on this in the future, because the free versions on Thinkorswim are lacking. And to get the professional versions of the squeeze, you're looking at $500 and higher, whoever's developing it, and it's ridiculous price to pay. So I'll be coming out with a version a lot cheaper for a pro version. And it's going to include the multi-time frame bar that I don't think other versions have. I could be wrong about that, but I don't think they have that. So let's go to the 10-year yield. And we are up. And this is the problem. Wow, look at this move up higher. Now, we were down on Friday. Now, what we did do last week is that we did tap the upper band of weekly resistance. Now, if this alert fires off and we press up higher, in all probability, we are going to see a sell-off in the equity market. What did I just do? Let's try that again. This is a very important alert to set up. Got to have it. Okay. Good. Okay. We're up in the pre-market session. We're firing off squeezes very strong here. I think we're going up higher. At current, this is a 4-hour chart, and we're going to be looking for a breakout on a 4-hour time frame. There it goes. This is a very, very important chart. Let's go back to the 5-minute. And this is very strong. A little bit overbought here, but very strong nonetheless. This is the 2 standard deviation Bollinger Band. Let's check out the US dollar. The dollar is consolidating. Let's go to a 15-minute view. We have some squeeze bars firing off here, positive. Looks like they want to try to take the dollar up. Here's your Keltner channel. So this is going to play into our trade of gold and the mining stocks. Euro is down. 15-minute chart is firing off some selling pressure. Japanese yen. It's on the session. Not much to talk about there. Bitcoin had a really, really good, wow, look at this. A really, really good weekend. We were above 30,000 for a brief minute yesterday. Actually, early, oh no, it was yesterday. And it pulled back. But it looks as though we're resuming the upward move. Take note of the buying pressure here. Let's pull back to a 4-hour view. And you can see that it's really, really strong. Daily view. Really, really strong. Weekly view. Try that again, Bob. Weekly view. There you go. Now you see here, these black dots. You're not going to see this on the regular squeeze that's out there on Thinkorswim. You're not going to see that. This is implying that you have a change that's imminent and that you're probably going to get a breakout very, very soon here on Bitcoin. Now, I dollar cost average in every single Monday to Bitcoin. So I'm going to want to know if we fire off here. Oil. Now, oil pulled back off its highs last week, and it is selling off yet again. We're down about 1/3% at current on light sweet crude. Let's take a look at natty gas, of which I have a long position in. It's up at current. It did not have a great close on the week. We're getting a bit of a squeeze firing off here. That does not mean it's going to open up with a squeeze tomorrow morning. A 4-hour chart showing a squeeze will be a lot more indicative of how we'll open up tomorrow morning. But right now in a 4-hour view, natty gas is not looking good. Looks like we could easily fade here. So I'm not overly optimistic about tomorrow morning opening up as we're trading right now. You never know. But on a weekly time frame, it's firing off negative. Excuse me, that's a wrong chart. Did I put in the wrong symbol? I think I did. I did because I typed it in wrong. All right. So I knew there was something wrong. I was looking at the weekly chart. I could have sworn it fired off positive, and it did fire off positive. We are up a current spot 1.4%. But still, it did not have a good close on the week last week. So I'm going to stick with the trade for now. I went out 1 year on the call options on nat gas. It's a small position. I want to add more, but I'm only going to add on strength. Let's take a look at the precious metal prices. Let's go with GC, gold, spot gold. We're down over a 1/4 percentage point. Looks like we had a bit of a look at the downward move at the open here. We had a bit of a parabolic move up higher above that 2000 mark, and programs just kicked in and sold it off. So look for a retracement here on gold. But I do think that you got to be a buyer on a pullback of gold. So I'll be watching these Fibonacci retracements and support levels, of course, support levels to determine when it's right to begin bull operations using call options on gold. Now, let's check out silver. Silver down over a half percentage point. So I view this as not bearishness. I view this as opportunity, another opportunity, perhaps a last minute opportunity to get involved here with precious metals in advance of a big move up higher. If we close at or where we're at or better on the chart, monthly chart of gold, look out above. We're going up a lot higher. And the problem is for gold bears, especially the shorts, is that the street is very, very underweight of gold. And there's a very small pool of gold out there relative to the investment dollars that are going to chase this thing up higher. So that's why I want to buy the call options. The only problem that I last looked at here on gold, I think the call options were very expensive. Yeah. IV ranking of 66%. So they're expensive. I need a pullback here before I could go buying the call options, or else I'm just gonna have to sell puts and just sell premium, collect cash flow. I'd prefer to not do that. I'd prefer to buy the call options in this scenario. What else? What else? Ag. We need to go over ag. Back to charts. Let's take a look at. Oh, we need to take a look at cattle. My New York strip chart. It had a bad week last week. Moo, good for us. We want cheap steak. We don't want that processed stuff. We want real stuff. And it was down last week. Very, very nice. Still a strong chart. Lots of momentum here. Not broken. Let's check in with. Where's my ag? It's gone. Ag. I had this all set up. I promise. I promise. I had this all set up. Here we go. Corn. Weekly view. Another move up higher last week. What do we have? 5 consecutive up weeks, but I got to tell you, this looks to me like a bear flag setup, a dead cat bounce. I don't like it. Soybeans looking better than corn, but to me right now, this is a dead cat bounce, much as what you saw back here from the week of August the 7th up through August the 28th. So I don't believe this to be a bottom yet. Once we get the pullback and a higher low or a retest of lows and then a follow through and a new higher high, then it's game on for soybeans and corn. Not until then. Wheat, let's try that again. Wheat, again, a dead cat bounce here on ag. I would not be a buyer quite yet. It's nice we're seeing some green on the screen, but not enough to get us bullish on the names. Sorry, my voice is going. Let's go to some comments. I'll save my voice for a minute. Are we tracking a little bit? Oh, yeah, I'm tracking Bitcoin. No doubt about it. Yeah, I'm very bullish on it. I've been dollar cost averaging in. Hella high water. That's good to know. I need coffee too. If I do, though, I won't be able to go to sleep. Dang. Good evening, Professor. Thank you. Chat GPT, ChargePoint, EV charging stations, battering down hard. Oh, that's not Chat GPT. I see what you're saying. It's PT. Okay. Really hard. All right. Um, I bought some CLSK and Wolf. Most of the others have more option players and a little bit more social exposure, drama. We'll add those on to the list. Now I do. Oh, here's my pen. The list of names we're watching for stock chart review. Select the worst pen. CLSK Wolf. Love that symbol. Okay. Yeah. Easily. I mean, where's it now? Yeah, easily. I mean, remember why gold broke out. Remember why it rallied. It's geopolitical risk. It rallied with the dollar. Gold stocks rallied with the dollar. But as soon as that risk comes off the table, you're probably going to get a really big pullback on gold and the mining stocks. The only caveat to that would be is if the dollar breaks down hard, that would keep a bid underneath gold and the gold stocks. So if the dollar remains strong and that geopolitical risk comes off the table, then you could see a drop in gold and the gold stocks. Crazy that cat is pulled back with gold on the move. They're not exact. They're not really all that correlated. I don't believe. I haven't checked, but I don't believe them to be correlated. Talon, where you been, brother? Thank you for all your hard work. Thank you. Thank you for always being here. You always cheer me up. You and Franklin and the guys, Jeff and Sean. Love chatting with you guys. Wendy. All right. And if I forgot anybody, I apologize. What else did I forget to do? Did I do all the options? I mean, do all the symbols? Did I forget anything? I did the dollar. Let's check back in with the NASDAQ 100 really quick. Not much of a change here from last look. Looks like we're setting up for a continuation move up higher. Okay, let's do some Congressman Lota. We are now 14 minutes into the show. I'm sorry, 34 minutes into the show. Wow, that went fast. Still thinking about you, brother. You got to do the right thing. Vote for Jim Jordan. Get it done. Get it done. And here's, I'm going to scroll through these. These are all the names. If these guys are in your district, call their offices. Call their offices. There they are. I posted the link. I'm going to post it again. These are all the names that need a phone call, and let them know we are watching you. Do your job. Don't be a rhino. MMM, 3M. Mo. Hey, Sean, Mo. That's a yielder. I remember that you said that about CrowdStrike. When they bring it down hard and started. Yeah. I saw that on CrowdStrike. Yeah, it's an IBD darling, Investors Business Daily darling, and those names when they correct, they correct really hard. I'm a huge fan of Investors Business Daily. I subscribe to it. But the thing you need to know about those IBD darlings is that when they correct, they really plummet. And most of the times, those names do not recover and reclaim their former glory. So I'm not saying that about CrowdStrike. That's a pretty established company. TLT. I own some TLT. I'm probably going to be buying more. F for the lovely Jody. All right, let's get to it. All right, economic data coming out this week. Nothing tomorrow. Monday, not much going on there. Now it's really going to be a quiet week until Thursday when we get JDP. This is the first read, not a revision, but the first read for Q3. Durable goods, big number coming out on Thursday. Now, if they happen to rally the market, here's where I think the opportunity is for them to rally the market. It's going to be a very quiet week. Really, no economic data coming out Monday through Thursday morning. Now, we're going to have earnings coming out Tuesday on Microsoft and Google. Big names. We're going to watch Visa as well. That's a measure of the consumer. Meta, important. Boeing, important. IBM, not as important as it used to be. Amazon, very important. Jody's Ford is on here. We're going to watch MasterCard and UPS, important. This is going to be a very important week for economic data coming out of these names. Are they able to maintain their margins? Visa, MasterCard, is the consumer still spending? What is their forward-looking guidance on the consumer? Intel had a very good quarter last quarter. That should be an interesting one. They haven't been interesting in 10 years, but they are now. So going back to the economic data, watch durable goods. It's very important. Oh, on Friday, we get the PCE index. That is going to be a very important number. That is the Federal Reserve's preferred measure of inflation, better than the CPI. So Thursday and Friday, very important numbers to watch. So what I think is going to happen, they're going to rally the markets. The markets could stumble if Google, Microsoft, one or both disappoints. If they're optimistic, you'll get a rally into Wednesday. Meta, is that a market mover? You could argue, yeah. It depends upon if they miss. Do they miss by a mile? And why did they miss by a mile? If they beat, like Netflix, is it really that big of a deal? I don't know. I don't think so. I want to say no. Netflix didn't have an influence on the market last week after earnings. It was up on Thursday and Friday, and it did not influence the market for the better. I suspect the same thing with Meta. Now, Amazon, completely different story. They can influence the market, no doubt about it. So the three top names to watch going into the new trading week, Google, Microsoft, Amazon, they could send the market higher or into a tailspin. And it doesn't take all three. It only takes one to really tank the market or to inspire the market, depending upon how the bad news out of the other names. So that's the week. Expect a rally early on, Monday, Tuesday. After the close, I think that if they rally us into the close on Tuesday, I'm going to begin to re-nibble on our short position. I booked profits on Friday on our put position on the triple Qs. I'm going to look to reestablish that position, not 100% all at one shot, because we have too many headwinds. Right? I'm looking to short, but I have too many binary events out here. Microsoft, Google, Boeing, Meta, Amazon. They could toast me, right? So I only want to nibble, and then as we begin to rally up and into, let's bring up a chart here. Let's bring up the trip Qs. Right here in orange is the 21-day exponential moving average. That is the resistance level I'm going to be looking at as resistance on the triple Qs, and I'll be seeing whether or not they can close above it. If they flash a wick, a topping tail, a shadow, call it cupcakes, it doesn't matter. If they fail to close above that 21 period exponential moving average, I'm going to be looking to short the triple Qs yet again. And it goes for a whole host of other names that we're looking to short as well. Tesla is one of them. Marriott, one of them. I did a video, actually a live stream yesterday. If you're not on our small account list of viewers or invitees to that live stream, link below. It's called the 30-Minute Chart Club. That's going to change. A lot of change coming in 2024. A lot of it for the contrarian traders. So stay tuned. More to come. But if you want to be part of that current public live stream, soon to become very private, join up now. It's always going to be free, but you need to be on our members list for various reasons. I won't go into it now. So watch the 21 period exponential moving average and anything that you're looking to short. That is your line in the sand. Where was I? We broke down below 29 handle on the shoulder PE ratio last week. We haven't been there in a long time. Now, going into one other reason why we may rally here. I hadn't read about this because I think it just came out. And this is Monday, China. So this is news coming into the new trading week. And I don't think the markets are really reflecting it yet. China's central bank injected $100 billion into their lending market on Friday. On Monday, China made the largest injection on record of one-year policy loans on Monday. I think that they're talking about Monday being tomorrow for us, Monday now for them. This comes after China unexpectedly implemented their biggest rate cut since 2020. China also cut rates on $6 trillion in mortgages. All as the bank run began at Bank of Shenzhou on fears that the collapse of Evergrande made them insolvent. What is happening in China? Well, we've been talking about that for a while now. So here's the PBOC, People's Bank of China, pumping money into the economy. And the reason why yields are rising here in the United States is that they're dumping treasuries to raise dollars to pump into their economy. The problem is that it's finite. It's not going to work. They have a lot of problems there. Not the least of which is the fact that you have companies that are leaving China hand over fist, and you also have a demographic time bomb. They undercounted their youth by 100 million people. 100 million people. That's 1/3 of the U.S. population. So let's talk about too many legs holding up too big of a stool, right? So usually you have 3 or 4 legs on a stool. Right now, when you take a look at the markets, you have 7 stocks: Tesla, Amazon, Netflix, Meta, Google, Apple, Microsoft. Those names are holding up the triple Q names. And if they go, which they've already begun to do, namely Tesla, Meta began to break down. That's why I had to get out of that trade, because I was worried about a breakdown early this coming week. Apple has already begun breaking down. Microsoft began to break down on Friday. So these names are now beginning to come under pressure. If they go, this whole market goes kaplooey. That's the technical jargon that we're going to be using for this market moving forward. Kaplooey. I got to figure out how to spell that, but kaplooey. This market's going to go. So we got Peter Sanaj, who's a very, very good commentator. And I want to play this for you folks. Weldon, link below, 30-Minute Chart Club. It's going to change soon. The name on that link, I didn't get a chance to this weekend because I did the live stream yesterday. 30-Minute Chart Club, that'll get you on the list. Let's play this. Let me get my audio up here. I'm not going to play the whole thing, just about a minute or so.
Relaxed about stagflation, as headline CPI has been coming down the past year. because falling CPI suggests that the Fed could cut rates sooner, which turns back on the easy money drug that feeds tech stocks, growth stocks in general. If that's what's happening here, then it means the entire stock market is held up by a 7-company string, which is itself duct taped to a greasy patch of head-faked CPI. Meaning when and if financial markets finally notice that inflation is stuck, in fact it's rising, the very last leg could come out of the stock market. So what's next? Brought to you by Unchained. For the past 6 months, I've characterized investing in stocks as picking up dimes in front of steamrollers. With money market accounts now paying 5%, it is hard to see how stock investors are getting paid for the risk. And so for many, it is becoming a very good time to pull some cash out, to park it at 5% and see what's next. Note, I could always be wrong. I, for one, did not expect COVID to send the S&P up 50%, but 7 stocks and a CPI on the move is a very fragile place to invest your life savings. Okay, we'll be watching. See you next time.
I'll share the link for these if you want to watch the whole thing. It's very short, but he's a very, very good commentator. I like his work quite a bit. And he's on Twitter, Peter St. On. Here, I'll send you his Twitter feed if you're interested. And there you go. So, you know, this tells 1,000 stories here. Tesla already taken to the woodshed. Microsoft has already begun to break down. Let's bring up a chart of Microsoft. First off, here's Apple. I already have it up here. Apple, look at this breakdown. I call this, all these moving averages above, I call it spaghetti. And you don't want the spaghetti moving down on you because it acts as a declining ceiling on any rally. So this is why I said earlier, and as a matter of fact here, you could see how when it broke, the 20-period moving average, this is a simple moving average, that sellers moved in, and they moved in heavy. They did not want to see Apple break down below that 20-period SMA. Now, Microsoft, it's still above the moving average. The however is that when you take a look at Microsoft and its formation, here's a stock that broke out not too long ago. Now it's broken down out of a flag formation and you have momentum going the wrong direction. So what I think is going to happen here is much as what we saw with Tesla. I'll go over the chart in a moment of Tesla. Weekly chart, though, this is a daily chart of Microsoft. So what they're going to do is they're going to rally this back up to around 330. Then I think it fails, unless, of course, they beat on their earnings. So that's the fly in the sand. Well, am I going to short Microsoft in advance of earnings? No, I am not going to do that. Now, other names like Tesla, let me go to my saved chart of Tesla to save time. Now, Tesla had broken down back here. This is a very important chart. Back here, the week of September the 18th. I mentioned this yesterday, and I keep repeating it. Nobody talked about it. Nobody. I talked about it. I said, watch for a retrace back up to the support level. It's probably going to fail. I didn't do it once. I did at least twice. But nobody on CNBC was talking about this. And now we have a confirmation breakdown on Tesla, daily chart. What I want to see here is a rally. Ideally to the 150-day moving average, which is at around 228. The 20-period moving average is way up here at around 250. I mean, this thing got destroyed last week. And let's take a look at the EMA 21 period. It's going to look better than the 20-period SMA. It's going to look closer. but not that much closer. So I think they're going to rally this up into the 150-day moving average in orange. Then I'm going to short it. Other names. What else are we talking about? Netflix. I think they're going to continue to rally Netflix up with the rest of the market, but this too soon becomes a short because you have a ton of overhead supply up here at that 420 mark. If they get it up to 420 or higher, I'm shorting Netflix. Whether it be I'm selling not covered calls, whether I'm selling naked calls or I'm buying put options, it all depends upon how expensive the options are. If the premiums are really fat, I'll sell the options. If they're really cheap, I'll buy the option. Doesn't bother me either way. So the Magnificent Seven is already breaking down. And Google, which has been very strong, also broke down on Friday, broke support. So it's already begun. It's not if it's going to happen, it's already happened. So be careful going into the new trading week. If they rip the market up higher, don't be surprised. You heard it here first. That's what they're probably going to do. Why? Stock market is kind of oversold. Short-term basis. Quiet economic front Monday through Wednesday. We have earnings on Tuesday. So at least between Monday and Tuesday, they have free room to run this market up higher. The question is, how does the market react on earnings coming out on Tuesday evening? So that's where we get a little bit wonky. But if we rally up into resistance, I'm shorting the Qs. A little bit. And then we'll get the earnings in the rearview mirror. And then if the market begins to waver, we go leaning into the short side. We press that short. Now, this is put out by Carter Worth. He does some good work. I'm a big fan. Sometimes we disagree. He didn't think that the 10-year yield was going to break out to new yearly higher highs. I said, no, it's going to break out. So we have our professional differences sometimes, but generally, I'm a huge fan of his. Great work. So I recommend you follow him on Twitter. So the Russell 3000 index, year-to-date change is up only 8.88%. Of those stocks that are up, they make up 39.8% of the index. So you have a very, very small component that's driving the Russell 3000 up higher, and the rest of the stocks are down. Look at the number of stocks that are down 10% or more. 1,367 names, 15% or more. You can go on and on here. So much for this myth that 2023 was a bull market. It was a dead cat bounce. Don't buy into the myth. Now, the ground war in the Middle East has begun somewhat. Right now, we're not seeing a lot of response by the equity markets. In fact, it's very, very quiet here. Too quiet. So oil is down, dollar's flat, equity markets are slightly up, gold is down. Are they beginning to price in a nothing burger here? Maybe. But the one thing that we do know, because it's already begun, they want the new laundromat. Ukraine, for the most part, is shut down right now. They need to get money over into Israel to keep the military-industrial complex going. Congressman Lilota, we are now, 55 minutes into this live stream. We have not yet forgotten about you. Do your job tomorrow. I'm going to blow through this really quick. Here. Cardboard box recession. I found this very interesting. I hadn't tracked this chart in a long time because I had it on a separate chart list. I put the article in here. I'm going to show you what this guy means. I'm going to cut to the chase because I brought up the chart. Now, this is a monthly chart of what do they mean by a cardboard index? Is basically containers, packaging for goods. And whenever you see them go into free fall, it means that you're going into recession. Long story short. And This is why Amazon's report this coming week is so important. So you could see that in prior times, back in 2007, the financial crisis, here was the Dow Jones U.S. Containers and Packaging Index, and fell off of a cliff. We all know what happened back then. Then you had in 2020, fell off of a cliff. Here we are yet again, beginning to break down. Lower highs and lower lows. And if that's not scary enough, watch this. We are at current, with a few trading days left to go, at current, trading down below this very, very long-term support level. If this breaks, look out below. I don't know whether or not you're going to be able to open this up, but I'll share this out as well. Yes, absolutely correct. They don't think that we're watching. Congressman Lota and all your buddies out there that won't vote for Jordan. See that? Tazy Wazy. I love that name. Any man named Tazy Wazy or female, that's a confident person. I'm with them. That's why they wouldn't let Jordan win. He interferes with the establishment. Congressman Lord, I know you're a better man than that. I voted for you. You're a better man than that. Are you part of the establishment? I don't think so. We'll know soon enough. Maybe he is. Maybe he's not. I don't know. He never had a shot. Well, I'm sure Congressman Lord is going to be a leader now and not a follower. He's going to be a leader now, and he's going to go to bat for Jim Jordan. He's going to know the error of his ways, and he's going to convince his fellow rhinos, get out there and do the right thing, because we're watching you. Okay, so the percentage of subprime, I think this is subprime. Yeah, subprime borrowers, used car loans, unable to afford the payment. Delinquencies are rising, folks. And the reason why I started looking for that was subprime auto delinquency erupts, reaching highest record rate on record. On record. Think about that. Let's do some chart requests. TZ Burton, welcome, pal. Okay. We'll go for a few minutes over. Weekly chart. Clean Spark. Nice name. Clean Spark. Short interest is rising here. For whatever reason, this name has shorts interested in it, but that also sets it up for a short squeeze as well. So just watch the average daily volume relative to the number of shares short. Divide the average 3-month daily volume into the number of shares short. That gives you the number of your days to cover on a short squeeze. If that's multi-day, you have a potential here for a short covering rally, but you just need an edge to get in on the long side. I'm not seeing one right now. You're being rejected at resistance of $4.32 daily view. Daily chart, bearish reversal bar. They tried to break it out on Friday. It was rejected. Again, short volume is rising on CLSK. I'm not a buyer here. I would be a buyer if we're able to close above $4.32. Going back to that weekly chart, that's where I would create my alert. Until that alert fires off, I wouldn't look at this thing ever again. There we go. Wolf. Love that name. Hate the chart. So here's a classic example. This is what I was mentioning. That looks like it's going to happen with Google and Microsoft on a daily time frame, and what did happen with Tesla. Now, we broke down back here the week of the 18th, just like with Tesla. Rally back, rejection. Rally back, rejection. Followed through to the downside. They rallied it back. Again, rejection. This is going to get resolved probably to the downside. I would avoid this name, Daily View. The one thing I will say about the daily chart is that you have RSI, the relative strength indicator, rising for whatever reason. But you also have simultaneously short interest rising as well, and it's broken out. I would avoid this name. For whatever reason, the shorts love your names. Cat. Now, the comment earlier was, is there correlation to gold? There's really no correlation to gold between Caterpillar. Remember what's going on here. We have economic slowdown globally with yields that aren't high enough to stamp out inflation. Yet there's talk that they're going to stop raising rates. The markets are pricing that in. That's why gold is going up and CAT is going down, because you have a global slowdown. So this may catch a bid on the China news that they're injecting liquidity into the economy. It's not going to be enough. $100 billion into the Chinese economy is nothing. They need $1 trillion. They need a huge number. It's not enough. So very, very bearish here. Watch for a rally up to the 21-period exponential moving average weekly time frame. Then I would fade that rally. I would short it. You're probably going to rally here. I think that this has been beaten up very, very hard. I did not want to do that. We have what, 40 people on right now. If I could ask for 40 likes and thumbs up, notification bells, all that good stuff, it really helps me out with the YouTube algorithm. So the downtrend channel is alive and well here. I still think that we may bounce here on Caterpillar. But again, the downtrend channel is alive and well. I would fade that rally. Dane, I will definitely go over it, pal. You got it, pal. The 20 holdouts on Jordan were on appropriations. Well, yeah, you're right. I think 7 of them are on the appropriations committee. Another 5 or so are on armed services committee. And it's the military industrial complex out there blocking Jordan so we could send money overseas. Congressman Lota, look, everybody sees you. Come on, do the right thing. I would love to have you on. You want to come on next Sunday night or next Thursday night? We'll go live. Whenever you want, we'll go live. Whatever night you want me to do, I'll go live with you. If you're a staffer watching, let them know. It's going to be a very, very polite interview. I'd be more than happy to give them airtime. I will not take any cheap shots. I'll be very, very professional. I'll not be like MSNBC and those thugs over there. I'll be very polite and cordial, but it'll be straight answers or straight questions, and I want answers. That's simple as that. So we'd love to have him on. It's not going to be if he's doing the right thing, then I want to, bravo, man. You got my vote next time around. Okay, let's move on here. 3M. Again, it's a broken stock that is due for a rally. You have support right down here at the fractal trend line. This is the average true range on a weekly time frame. So the probability of a bounce is pretty good. And you can see they tried to break it out last week, but it got rejected. But I would keep an eye. Folks, we're using TrendSpider, 35% discount code. Use the link below and get these awesome alert setups here. Who knew you could set an alert at an ATR line? MMM. So we'll keep that active for 10 days. That's going to happen really quick, probably tomorrow morning. 3M Daily View. Not a good close here on Friday. Volume did dry up Wednesday through Friday. So I think we're going to bounce here very, very soon on 3M. And this is how weak it was. It rallied up and into the, not even the 21-day moving average. Rallied up to the 9-day. Couldn't even close above that. Well, it did here, but it failed. Very, very weak stock. Mo, consumer discretionary. Or is it a staple now? Are they more than tobacco? Did they buy Kraft? Altria. Closed up on Friday. I'm torn on this one. It looks like they barely held on to support at these moving averages, the 21 and the 9-day moving average. Weekly view. Oh, we have a bunch of resistance above here. That's what's going on. Resistance right at 43.51. You close above that mark, it's a long. But I think this fails. I think it gets rejected and moves lower. They have a beautiful yield, so I'd be watching it. In fact, I'm setting up a list of dividend payers that are getting beat up that I'm going to be looking to buy once we bottom out. So I just added Mo to it. So resistance above, I'm not a buyer here. I think it breaks lower. TLT, I own a little bit of TLT. Yeah, we're right at daily support at the ATR, the fractal trend lines. I think that we're going to bounce here. On a weekly time frame, yields are at or near the upper band of their uptrend channel. So that means that if we correct on the 10-year yield, the 20-year bond should also catch a bid along with the 10-year bond, and that will bode well for the TLT. Now, on the week, at a very, very poor week, I'd be a seller of puts here. I tried last week to sell puts. They just weren't paying up enough premium for the risk. And I'm glad I walked away from that trade because the shares did decline on Friday. Yeah, the IV ranking is very, very expensive, but I couldn't get a good price for those options to take the risk. But now we're lower on price. Now I'm going to be a little bit more deliberate on making that trade happen. Ford for the lovely Jody. Ford is a basket case. It's now broken down below support. On a weekly time frame. Down volume was big on the week. It was up on Friday. Looks like they may try to give this a bit of a rally, but you have a lot of resistance up at that $11.75 mark. So just be careful. If anything, I would not expect a recovery here. I would use any rally to fade this and probably get short. Last one up, CrowdStrike. Fair and balanced. Thanks. That's all I want to be. Thank you for that. It really means a lot to me. I want to be fair and balanced. I don't want to be partisan. I just do the right thing. Work. We the people. We the people. You're a representative of the people. Do your job. And they gotta block this this big money going to these packs. You're welcome, Frank. I'll talk to you in the morning, pal. You're welcome, Jody. I've been trading, following option for 15 years, and now they're massively overpriced. Well, they were more expensive. Options were more expensive back in 22, the whole year. So I don't think they're overvalued at all. I think they're going up. I think they're going to become more expensive. It's going to be a great opportunity for option sellers. I mean, I'm looking forward to it, to be honest with you. You're welcome, Mike. Have a great night, pal. All right, CrowdStrike, weekly chart. We'll leave it off here. Bearish reversal bar on the week. We got a little bit extended. 192.13 is where we had our resistance mark. That's where it topped out. We did close at support, so it's not broken. The trend is still higher. Here's your upper band, lower band of support, daily view. It held support on Friday. However, RSI, lower highs and now lower lows, not looking good. Short interest beginning to build here. So it looks as though the shorts are beginning to smell a little bit of blood in the water here on CrowdStrike. So I'm not a buyer. I wouldn't short it yet either. So if I was going to do anything, I would probably sell deep out of the money calls on it, betting that the market's going to roll over along with CrowdStrike. Folks, that's it. Like, subscribe, have a profitable trading week. I'll talk to you all soon. Thank you for being here. Be well.